Hit it.
It's Friday, March 18th, 2022, episode 172. I'm Patrick Ceresna.
And I'm Kevin Muir. Well, it finally happened. After a terrific March COVID crisis buy the market call 2 years ago, Jimmy Jude is back to give us an update on what he is thinking in this challenging market environment. Folks, this is one episode you don't want to miss. Then Patrick, the leader of the Magic Order of Technical Analysis, reads the market tea leaves for us.
And then we end with the segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way. So stick around. We got a great show. Lena, hop on. What beer am I drinking this week?
So this week, Patrick is drinking Wendland's Cerveceria's Two Nut Turner Session IPA.
Sessionable, Kevin.
It's sessionable. Again, Patrick's the international man of mystery. He is still not in Canada. He's somewhere we don't know.
Well, this is a Mexican beer in Mexico, so
Okay,
yeah, I think
well,
you can.
I guess
you
we
can
give it away there.
Yeah, you can give it away a little bit. Anyway, so yeah, it's pretty nice. Anyway, Lena, do you have a description for it?
Yeah, so it says light colored beer, white foam, and medium carbonation. Fresh aromas thanks to the classic American profile. Citric, piney, resinous, and I can't read this word. I think it was poorly translated, but crushable, refreshing, and well balanced with a slightly bitter taste at the end. It's crushable.
Nice.
Right. Whenever you get an evergreen tree in there, it's always a good beer.
There you go.
Lena, why don't you tell us about the merch store?
Show us some love and get some Market Huddle swag. Go visit our merch store at markethuddlemerch.com or visit our website at markethuddle.com and click on merch icon to visit our merch store.
All right,
Great.
Kev, give us some side effects.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include cuppy Kool-Aid compulsions, the psychedelic crayon deliriums, and the macromania migraines.
All right, let's get to our interview with Jimmy. So joining us now is Jimmy Jude. And Jimmy, it's been so long since we have. In fact, it's almost the 2-year anniversary since you've been on the show. It was the COVID bottom, and you came on the show and made a fantastic call. And I think it's really interesting that we're getting you back here just as the market's starting a rally after a couple month things. So we'll get to talking the markets in a little bit and see what you think of it. But wanted to just start off and say it's great to have you back on the show and really what you've been up to. How's Florida? Is everything cool down there?
Well, thank you for having me on. This is like our 2-year anniversary, and it seems like really quite fitting to like have a conversation right now. There's so much going on in the markets and in the world, much like there was 2 years ago, and a lot of uncertainty. So, I'm kind of like you guys. I'm reading it day by day and taking it. One level at a time. Down here in Florida right now, I'm always like a boots on the ground type of guy. And like people are weathering the storm. Like the economy seems pretty decent. I don't know if it's just a Florida thing now, you know what I mean? Because so many people are coming down here, that, like even my view of the economy could be a little distorted. The same way I used to rank on like all the guys from New York City, how they are completely clueless. They have the worst like finger on the vibe of the economy on the planet, and all of them, they all live in this fucking bubble.
That's right. And now it's Kevin here, and now they're instead of living in New York, they're all around you.
Right. So they're creating this fictitious bubble around me. Now I'm going to be fucking all dumb and be like, "Oh no, everything's great," as the world's burning, or the opposite. I don't know, but it's been great down here in Florida. We got out of this crisis a long time before anybody else. So I've kind of had a lead on the way things are going to go, or the way they look in the future.
Okay, so it's Kevin here. I'm going to jump in with some. We asked people, what questions they wanted to ask you, and before we start, you had a picture of yourself that you had tweeted out where you were kind of advertising that you were coming on the Market Huddle, and one of the first questions that I got was from another buddy up here in Canada, and he was asking, "What's with the toque? You're in Florida, how cold could it possibly be that you need to wear a toque?"
dude.
And just so you know, a toque is a hat.
The problem is like I've been down here for like 11 years now.
Yeah.
And your blood gets thin and you turn into an old man. And I'm like, I used to make fun of guys like me, and now I'm the guy grabbing the toque. When it gets like 50 degrees down here, I need a toque. It happens.
Okay.
I'm just a giant pussy. That's the only.
But even more important, you can say whatever you want, Jimmy. You have a license to say whatever you want. But more important, Dario Perkins, a previous guest of our show and just a terrific guy. He had the real question, the question everyone wants to know. He says, "Ask Jimmy why he appears to be at the beach, but you could see the bathroom reflected in his sunglasses."
What's funny is the bathroom reflected in my sunglasses, I think, is the building next to me.
Oh,
because the dude was like, that the tiling, and to tell you the truth, the bathroom that was behind me, if it was reflected, would have been like bare sheetrock and like exposed walls. Like,
okay. So you're not one of those TikTok posers and like superimposing.
No, believe me, if the bathroom was actually in my glasses, people would have been like, "What the fuck? What's up with that guy's bathroom?" Because I'm actually redoing it, and it's That was like when the guy said that to me, I was like, "Oh fuck, is a disaster behind me in my glasses?" But it wasn't.
Okay. So let's get to the markets because there's a lot to talk about, and I think that there's I guess there's a lot of themes that we can go on, and it'll depend on our time frame. And I guess let's start with just the short-term time frame. Obviously, Ukraine was what's been on everyone's mind. We all know it's a humanitarian disaster, but we're interested in talking markets, so we're going to just focus on this as the markets. How do you see this as in terms of how it's played out for the last, I don't know, let's say month, and how you think it might play out for the next month?
Right. Well, I definitely did not have, Russia invading on my radar. I was actually I thought we might be at the tail end of a correction when that we got the double whammy, and it truly is a double whammy because it's like the geopolitical risks and it lights another fire under inflation. Right. But it can be looked at in two different ways. It can be, first of all, okay, we all know the negatives about it. It's a fucking disaster, and it's hard to watch. But I also look at positive developments over the last week, where okay, these guys, Russia definitely seems to be kind of stuck in whatever plan that they originally had is not really going well. But a really big deal this week was when China made an about face and told everybody that they were going to allow more exposure to their markets on an accounting basis and more accountability. That kind of that. I thought that was a really big moment in the markets that were kind of not a lot of people talked about it because there was so much else going on with the Fed and everything. But that was a major pivot by China. It kind of seems like, to me, that China looked at this and was like, holy shit, these guys, this is now a fucking disaster for Russia. And it was almost like distancing themselves at the same time. Plus, their markets were tanking like crazy going into that. And they didn't want to get lumped in with Russia. It might have seemed like a good idea in the beginning, or at least a calculated idea for them to support Russia and see how things went. And maybe it gave them a little leeway on the path to Taiwan. But you know what? I think it's extremely positive what I saw this week. I think that was an about face by China. They're kind of like, oh, Jesus Christ, we're not betting on this guy anymore. You know what I mean? Putin's obviously done himself in a very terrible way. The only risk now is does he turn up the heat? And that's something that is really hard to for a trader or for a financial guy to make that decision. So you really have to you definitely have to protect yourself. That's still on the table. They're still in Ukraine, and he's still a dangerous guy.
Yeah. I've often said that both tails, both right and left tails the chances of a tail happening have gone way up.
Both tails, definitely.
Right. Yeah.
Because you could see, like I could make a argument about like first of all, this thing could like stop at a moment's notice. There could be an agreement. There could be, and I don't necessarily think it's the United States' place to create peace in this situation. I know we are major players in fucking it up and causing this war, but at this point, I think it's really the European leaders that need to step in. First of all, our leaders. You've seen our vice president go over there and cackle her way through a couple like press conferences. Zero confidence there. She's not getting it done. Okay, Biden's not getting it done either. He's too old. So we really need the European leaders to step up here to somehow figure out a situation. And they have the most vested interest. This is where their energy security is all about this and everything. So they're the ones that have to step up and come up with a solution to this. Like I don't think our leadership in the United States can do that.
Yeah, one of the things that I've often said is that people will say, no, look, Russia keeps pushing and pushing and pushing, and my argument is that he's going to keep pushing and pushing and pushing until the last moment, right in front of a deal. Like you're going to you're not going to see signs of him giving in until the deal is there. And
right.
So
no,
yeah.
And that's how you get like he's kind of he's one of these maniacal assholes that and those are the best deal makers. They press and make you uncomfortable. That's why you make the fucking deal.
Right.
So that's the risk is that he it'll get more uncomfortable before it gets better.
Okay, so we all know what happens if something goes bad in South. Let's talk about let's just imagine this weekend we had an agreement. Let's just say that Zelensky gives up the 2 provinces, he agrees not to be in NATO, and Russia agrees to leave. What do you think? How much do we gap up on Sunday night?
Well, this is like such an important area in the market and in like the charts.
Okay.
This like 44.50, 44.60 area. There's a swing up here. There's multiple moving averages up here. There's the 50, the 200s right up above. Like there's all sorts of headway in here. So if we got an agreement this weekend and we just gapped up above all this crap that's in front of us, that we're about to hit into. That would be crazy, and it could potentially turn this entire area into support. I don't expect that necessarily. Like, I expect probably Putin to kind of try to squeeze the market down a little bit, make everyone uncomfortable. I would love to see. I think the most healthy thing that could happen right now is the market pause up here between 450 and 4,500, hit this resistance, come back to the 3220 area, retest some back support, and break this sequence of like lower lows and lower highs. Because once you break that sequence, that's more important to me than gap ups and all this other like kind of stuff. Like if you want this market to go up, you want it to do it healthily, and that would be the healthy scenario. These like that ebb and flow and that back testing, and that's how you build a decent bottom.
So until proven otherwise, are you in Patrick's in the camp that this is kind of a bear market correction, and until you see the charts tell you otherwise, you have to sell the rally. So I'm assuming.
You know what? Let me kind of build the scenario. So Jimmy, shit on my little scenario here. Tell me if you think. But like, so to me. when the market throughout late February into early March, every possible bad news was being thrown at it, and at least and at the same time you had the Euro stock shit in the bed. You had basically Nikkei breaking right down. Everything was thing, and the S&Ps didn't make lower lows, and like the markets in the U.S. held in, Russell held in, the Nasdaq really didn't do anything crazy, and so I mean, if all of that bad news was being thrown at it, it wasn't going to have a liquidity event or crash if all the bad news is thrown and it's not going down. And so, like, to me, a relief rally was the pain trade, which was that we're going to get this squeeze on the upside. I actually think we can make it all the way to 4,600 on the upside on a squeeze. But I think that it's the fake out, which is that it suckers everyone back into this market. We just keep melting up. Everyone feels like they got to get in, and then the rug gets pulled out later on all over again. I just don't think that. I don't think the conditions are here for us to be making 5,000 on the upside of the S&P by May. So this is
and you know what? That's a totally legit thought process there, because this could be very much a yo-yo type market, because we don't have the Fed behind us right now. We do. I mean, I do consider the Fed like still pretty easy right now, and even like their new dot plots. I understand that it was more aggressive than it had been. So people are like, oh, this is way more hawkish. I get it. But, it is still probably the lowest bar that they could do in this scenario. I mean, Jesus Christ, a quarter point at every meeting. You know what I mean? As like with name a million different metrics out there, which would like constitute a more aggressive Fed. So like but I do believe, like, kind of like in 2016, like, I do believe they'll use every pop up we get, whether it's 4,600, 4,700, they'll use it to jawbone and to be more aggressive. So we will, like, I agree with you. Like, this isn't just like a game on situation. It's going to be a lot of back and forth action here. Although I'm not in the camp of like, oh, we haven't seen our lows. Holy shit, we're going to, I'm not in that camp really at this point. I was, I should say that if we break any major technical situation here, we still haven't. We've just come up to that area where you knew there was going to be a giant piss fight. You knew there was going to be a fight at 4,450, 4,500 or that. So we're there, and like, to say anything about we're going to 5,000 or we're going back to 4,000 at this point, you really have to see the way it reacts. Otherwise, it's bullshit. But your premise that there's in this environment that there's probably a lid on these rallies is I can't discount that at all.
Okay, so Jimmy, let's put aside Ukraine for a second, because obviously if that deteriorates or improves, it will override whatever's going to happen. But let's just imagine that it kind of it meanders through, the market is adjusted for it, and it ends up being just a shit show that lasts forever. And pretty soon we're, as terrible it is, we're not focused on it. Let's talk about the bigger picture of what you see unfolding. And you mentioned that you said that this is still a Fed that is super easy. Is that enough to cause the market to rally, or do you think that we're at the point where that Fed is gonna is not the driving force to what's going to propel the stock market from here?
Well, the way I see it is like I see a lot of guys out there like immediately jump to like their guns on this, like, oh, the curve's inverting, the Fed's active. They're going to be way more hawkish. Like this is a shit show. We're going to be pissing into the wind. But there's also like I've been watching the Fed for a really long time, and trading this bullshit. So like I see like little nuances, like we knew that inflation was like, like I was a transitory guy in like September and October, and then I was like, "Whoa, Jesus Christ!" Like these upticks. Okay, this is different. But then again, we had a new regime in leadership. We had Democrats spending like crazy, and not that Trump wouldn't have, but still. So the Fed could have easily they could have easily like stopped QE like immediately. They had, like everyone was like, this is nuts. What are you still doing QE? And then they were like, all right, well, at the next meeting, we'll announce we're gonna, taper quick, more quickly. And then like, Bullard came out and he was like, hey, we should be a point higher right now. He kind of prepared the market for 50, and the market kind of was like okay with 50, and they could have gone 50 in the first meeting, I think, and they went 25. Like I haven't seen them do. You can say whatever you want about hawkishness and this and that, but I haven't seen them do anything like overtly hawkish. I've seen them talk about it, Like I honestly feel like they're a little bit nervous. They're not completely convinced that like we can handle these like an aggressive rate hiking situation or an aggressive Fed. And I think that like and people keep using like the 2018 analog. Like if you want to use the 2018 analog, all right, well, you know what? Powell also has memory. He hiked and got aggressive in December in a low liquidity environment. Like no one, like a lot of books weren't trading, and he created a shit show, and he created a fire that probably surprised him. And they had to pivot back and take back those hikes. And something I'm not like a big LIBOR guy. I never really understood it. But like something happened in the LIBOR market at that point too that seemed kind of broken. So I think like if you're going to look at 2018 as an analog, don't expect him to like make the same mistake and like jawbone the market at, you know what I mean? Just as it reaches like some critical point and send it down into the shitter. Like basically the only thing, this guy doesn't want to lose the market. Okay. Yeah. Because if he loses the market, then he has to go back and he has to pivot the other way. And it's a fucking night. Now he's got, instead of 7 problems, he's got 11 problems on his fucking hands, so he doesn't want to deal with that. And that's why I feel like their default mode is still like easy. I get inflation sucks, but you know what? Here's another thing. Everyone's, like when was the last time that like, okay, inflation hurts who? The less fortunate the most. And, but like when did the last time did you see the Fed like act or make a move where they actually gave a shit about the less fortunate? Like their policy has been driving the wealth gap for like 10 years. Anyone can see it, but they don't admit it. They're like, well, we're studying it and we see that there could be, maybe a correlation here. Like, dude, these guys are smart. Okay.
Jimmy, I'm going to push back a little bit and just okay. So I think you're right in that. Okay, they don't give a shit, but at the same time, asset price inflation would be counterproductive as well. So wouldn't you think that they would also at the same time want to keep a lid on letting things get really hot again in the asset prices? Like, isn't it about a balancing act? This is what back to your yo-yo comment. Is it not ideal for them to rather just keep everything in a big ass muddle?
Right, and I agree. But you know what, like. I think they'll muddle it if it gets up near the highs. I don't think they'll muddle it when it's in like that like danger zone. I think so like anything below, I don't even know. Like I guess I would say anything below 4,600 would be the danger zone. If we get above that, I definitely would. I'm with you. And I think that's what they were trying to do in the first place with everything that they've done so far. They just were trying to like take the air out of the low hanging fruit. They were trying to like knock down the shit coins and the stupid eval, stocks and stuff. And they did that. It actually, like a lot of that shit got pummeled. The NASDAQ got, a lot of the components of that got destroyed just then. They just almost just had their 2001, like everything now, like instead of taking years, it takes months to like complete the, you know, the cycle. But you know, they've done a lot of, they've accomplished a lot of what they wanted to do. But you're right, if it jumps right back up again, you know, be prepared for them to like come out with the hammer.
Yeah, and I'm with you, Jimmy, that everyone thinks that they're hawkish, but like, let's face it, what have they done? They've raised rates once with inflation running 7%. You mentioned that the correction that's occurred in those, let's call them dream stocks and the crypto and that whole speculative nature. We have a question from Steve Romeo that wants to know what like a retail gorilla best practices to survive in this market environment. And I would just say that I think that a lot of people have gotten absolutely crushed this last 9 months, and they've been very surprised. You, as a trader that has seen lots of these cycles, obviously knew this was coming. What advice and what comments would you make to people that are experiencing this for the first time?
You know, like, yeah, you know, like, you know, there's going to be ebbs and flows, and probably some younger investors probably got into some stuff that, you know, I've been there. We've all been there in like the .com bubble. You know, you get into something, it rockets up, it comes down, and you're like, oh man, if it gets back up to here, I'll get out. You know, and then you start thinking about like what your net worth was at the highs compared to here, like, and then you start thinking about like, oh, like suitable like puke points of your net worth, and like, and believe me, that's just a great way to go to zero. You know, like. You know, people that got like whacked in this stuff, like especially like the stuff that was crazy, you know, if your shit's, if you're in something that's down 70, 80%, you know, like, and you're still in it, you know, get the fuck out. I mean, at some point, I don't know, a shallow bounce, whatever, but you know what, like stuff that gets pummeled like that, that's the stuff that like takes a while to like base and, you know, like, but I would also tell the people, if anyone that got caught in anything, whether it was a shit coin or a high flying stock, and you missed the top, and it happens. It's a great learning experience. Like it's happened to me many times, and it's devastating emotionally, but it's also a great learning experience, and hopefully it happened in the beginning of your career, so you can make an adjustment from here on out. But it's you only learn that lesson the hard way. You know, you almost have to get fucked in that way to really, you know.
Patrick has a line that you have to do it with real money, because just pretending without real money, there's no emotion, right, Patrick?
Yeah, no, absolutely. You know, and even to your point about dumping stocks that you're down 80%, the problem is that you're now emotionally stuck in that situation. Even if you blow it out, you just use a simple thing like, just like you were talking about moving averages, you basically dump the stock and you say, I'm not going to buy it back till it's above its 50-day moving average. At least if you get back in at a later point, you've got an emotional reset about a new re-entry rather than being stuck on the fact that I think you should
take it off the screen is what my advice would be.
Yeah, exactly. Like get off the screen, reset yourself, and then you can always go back in and with a new clean slate, right?
It's true. That's so true. And you know, when you're in it and you're looking at it, like you said, like it warps your brain, especially when you have real money on it, you know, and like puking will set you free, you know, like flattening up and barfing that position. Now, all of a sudden you can look at it again, like from a different perspective, like, oh, Jesus, this chart is broken. Until it gets above this EMA, you know what I mean? I shouldn't even be looking at this anyways. Like, you know, like you think so differently as soon as you barf out of something like that. But, you know, and believe me, I'm not, you know, like I was like looking through an old stock portfolio the other day, and I saw a fucking .com stock, and I was like, what the fuck is this? It didn't even have like the right name or anything. It was like North Fleet. It's because it's changed its name like 9 times since the .com, and I own like thousands of shares of this, and I was like, holy shit, I can't believe I still have this. And I checked the chart, and it was like one of those .com charts that was like, you know, 0, 50, 0. And I was like, oh my God, like, look at you, professional trader, fucking with
We
this
all have
piece of
those.
shit still in your, you know what I mean? Like, I think it was 4 cents. And I'm like, well, 4 cents, I may as well
You
just
just,
keep it.
yeah, Jimmy. I have stuff that when you buy bonds, sometimes I trade credit, and when you buy bonds and then the company goes bankrupt, they seem to never go off the sheets. So they just sit there staring at me like as an insult to remind me of how stupid I am.
Right. But Pat, but you know what? Like, yeah, you're absolutely right about like clearing your mind, and then you like, if you like it, re-enter it. Look at a fresh chart. Look at, take it off your board for a little bit and then come back to it. And if it was a concept you like there's a couple of ones out there like Roblox and Robinhood, that you would think like, well, maybe they do have something here, like, even though I've been decimated in them, they do have a business, they do have a, like, so, but then again, like, it's like, get out and wait for the chart to, like, make that move where you originally get in. If you had no opinion on a stock, you'd be like, oh yeah, this is a great entry point.
Okay, so Jimmy, I was going through your Twitter feed, finding some gems to talk about. I got one here that I just loved. He says, your personal trading day stories are only entertaining to you and pure tortures for others to endure, which I don't agree with. But anyways, unless you lost a shitload of money, then everyone wants to hear them. So first of all, do you have any of them that you lost a shit ton of money that you haven't told us that you want to share?
Well, of course I do. I never run out of stories where I've lost a shitload of money. But no, you know what? Like, I think one this scenario, anyways, like, reminds me of like the one thing I want to talk about, because it seems like we're returning back to that, like, 1990s atmosphere where, like, shit matters. You know what I mean? Like, everything isn't going to get smoothed over anymore. Even when, like, from 2015 to now, even when the Fed was normalizing it and stuff, you knew they were, like, half-assed into it. They could always turn around. The fact that inflation is here and it's kind of like, like tight on them. And that means, like, we have to go back to be like fundamental traders again. We, like, numbers matter, the macro matters again, like the yield curve matters. It's jumping back to life. It's, like, it's really cool to see all this. And it reminds me of, like, when I first started trading in like the 90s. I got thrust into, because, like, I started trading, made it to trader really quickly. Then my boss got fired because of the Asian contagion crisis.
Yeah.
He blew out short premium in the Eurodollar option pit. Okay, so we were trading in the Eurodollar option pit. He blows out, and then it's like a 1-2 whammy. And this is what I fear about this environment without a Fed, like, there with you, even though the economy is doing pretty well. And like, it reminds me of, like, the late 90s, because there's going to be dislocations, whether it's in the credit markets or in currency markets, stuff that's, like, hard to understand and quantify.
Yeah.
And that's the stuff that, like, really scares me. It, like, I swear to God, I'm like less scared of the World War III than I am of, like, some strange, like, like, credit crisis. That shit is, like, the stuff that, like, it's so hard to quantify, and when you can't put, like, an end game on a shit show, that's when, like, vol, and that's when these markets really, like, come apart. And so I got put on. I was really young too. I had only been trading for like a year. I really didn't know what the fuck I was doing. But, like, I kept getting, like, thrust into these new positions because everyone kept getting fired in front of me, and they're like, "Hey, next up," and I'm like, "Next up," like, and I'd be like, "All right, okay, I'm number 2. Okay, all right, relax, like, you don't know what you're doing. No one's asking you any questions. You're number 2. Just figure this out before and then, like, number 1 would get fired, and they'd be like, "Yeah, Jimmy, you're up." I'm like, oh my God, like, seriously, I thought I would know way more than when you gave me the reins of this. And this was this was like a massive fucking position. we
Okay,
had
so this is 1 second. So this is 97.
Yeah.
The first guy blows up in the
Yeah.
Asian
Yeah.
crisis, but
Yeah,
then
he blows up.
then there's
He blows up.
a year later comes
Yeah.
the long-term capital, and at this point they put you in charge.
I'm in charge with another guy, and that guy's even younger than me. I'm like 25. This guy's like 23. You know what I mean? But at least he's pedigree. He's like from Cornell and shit. He's a brilliant guy. Not that he knows anything. Like, and neither do I. And
Right.
we're managing a 300,000+ euro-dollar option position, which is like a 800-pound gorilla that
Right.
like breathes $500,000 in and out as it like vol goes in and out. You know what I mean?
Right.
So it's like, up 500, down 500. Like this thing. Like, yeah, that was just like without any movement. You know what I
That's
mean?
right.
So
That was just like the bid offer spread on your portfolio.
right, exactly. So like so now I'm like thrust into this position, and Don Wilson is like the king of the pit back then, the guy that owns DRW Trading,
Okay.
who was like pretty much the best trader I've ever met in my life. This guy is like such a super genius, and he was like, hey, we're putting you on the pit committee, to settle the short dated options, which were the options that were like priced out on the red part of the curve, which is 1 year out. So
Okay.
it's like 1 year out of interest rates, but they are tied with a short dated expiration. So you can like basically you can bet or hedge on like that wild part of the curve that's a year out, but you don't have to deal with like that like all like the long-term vega and all those other dynamics of holding a position for a year. You only have to hold it, they trade in 1, 2, 3 month increments.
Okay.
I loved it because that was the part of the curve where like everyone went to like, that's where like the gamblers went, or the crazy hedgers went,
the true degenerates.
The true degenerates. And that spoke to me. So I was like the king of the shorts, and they were and the good thing is they were about price action and stuff. Like I was really flimsy on option theory and like, but I definitely knew price action, and I knew how to work the board in the shorts. So I'm settling these shorts, and I know I'm young and I'm fucking stupid, and Don Wilson probably just put me on this committee as like almost like a puppet regime. I stand next to him. We talk all day. We're buddies. I'm going to do what he does. You know what I mean? I'm going to have the same positions he is. I'm going to settle shit in his favor. I'm not going to rock the boat. He knew this. And so we're hanging out, and it's like kind of chill after the Asian thing, so like Vol's coming back in, everyone's kind of like exhaling, like, whew, that was a close one. That was crazy. Like things got nuts back there, but we're all like kind of settling in, like, and it's, and the summer's starting. So it's like summer doldrums. All right. And this fucking dude, like, because I was settling the shorts, like all the brokers used to like come to me for the really big orders. And this guy kept pestering me for this like short call spread that was way the fuck out of the money. It was a 50 wide point call spread. And he was like, kept pestering. He's like, where are you? Where are you? I'm like, and I'm bullshitting the guy. I figured there's no fucking way this guy's going to buy this. This was literally like, it would be like if someone wanted to buy, hurricane insurance in Florida in like January for 6 weeks. You know what I mean? You're like, fine. How much do you want? I'll drain my mother's bank account for this, motherfucker. Like, do it. So it was like that classic thing where, like, because you always had to know as an option, market maker, you always had to know like what's real and what's like window dressing from someone just like needs a hedge, the end of the world scenario for 6 weeks. And, those were the best to sell because, they didn't expect them to go in, they were just a hedge.
Right.
So, and so this one was like the berry of all berries, the easiest no brainer. And right off the bat, I look over at Doogie and I'm like, hey, this guy wants to buy this call spread at 2. And I go, how many you got there? And he's like, and he looks at me and he just like throws his arms up, which means like any fucking number you have, you know. So I tell the guy, I'm like, I got 5,000 at 2. And he immediately buys them. And then he buys like 5,000 from Doogie and then he's done. And I'm like, and the pit is pissed off. They're like, what the fuck? You know, it was like, you know, and I mean, when you're talking about it's $25 a tick, you know, it's a lot, you know, 5,000 at 2, you know, it's a lot of premium there. And I'm thinking like, holy shit, like I'm not working the rest of the summer. I'm just going to let these fucking call spreads rot and I'll chill out and hang out with my buds. And yeah, the next day, the funny thing is all the other locals were like furious that they didn't get any. Well, the next day they got them, and the next day they got them, and the next day they got them. This motherfucking customer kept buying this call spread, and like thousands and thousands and thousands, and I was like, now I'm like, I've got the entire, and he keeps going up, like he's buying 3s, and he's buying 4s, and he's buying 5s, and guys are like, you know, and I'm now taking heat. I'm feeling a ton of pressure from the pit to settle these things in the earth, you know, and because it's a call spread, it's way easier to settle low because, you know, you're settling 2 options and like it's, you know, if it was a call, I would be fucked. But if it was a call spread, I could blame it on skew. I could blame, you know, there's a myriad of lies that I could tell to, you know, substantiate my fucked up, you know, settlement, which, and believe me, my settlements were so fucked up on this. They were like, a guy would buy like this, and it was the same customer. He would come in and he would buy like 25,000 on the bell at 5, and I would settle them at like 1, you know, and I would settle them at 1, and I would literally like run off the floor. And as I'm running off the floor, I could hear my settlements hit the screen, and I could hear screams from the floor. From the, you know, like guys would be like, "What the fuck?" You know, and I'd be like, "Holy Christ!" I'd be like sprinting to the escalators, like, "Hey, you know, deal with that."
Was he buying these in front of like the Fed lowering rates?
Well, okay, so this is where the story gets really fucked up. So, you know, and I'm talking to Wilson. I'm like, Jesus Christ, this is like, obviously, what the hell is going on here? This is the most bizarre thing, because now we're buying the shit around this call spread. You know, we're buying options because it's like, what the fuck? You know, I'm selling so many of these. This is such a one-off thing. We start buying the options like around it and underneath it and other months and, you know, months around, because that shit, people are still like, what call spread, whatever, you know, like, what are you talking about? And the worst bit about it is all the shit we bought against the call spreads started to like decay and go the other way and started to like rot on us. Like nothing got bid with this fucking stupid call spread. So now we're getting like double ending heat. You know, all the shit we're buying to hedge this fucking crazy thing is all going lower, which only gives people more impetus to sell more. You know what I mean? They're like, all right, well, you know, I'm still buying this straddle at this. This guy wants it, you know? So, so one day I settle them at 0. And they were trading like 6, but every day, like it would be like a game. Like I would tell Wilson, I would tell Don, like, listen, you know, here's a bunch of orders. How do we tie them all together in the hierarchy of what the CME rules are, where we can settle it here? And Wilson, being the diabolical genius he is, he would come up with these like packages, like, okay, we're going to do this call 1x2 versus straddle versus an iron fly versus this guy's order over here. You're going to have to violate that order in order to, blah, blah, you know, and he would come up with this like crazy thing. And then he'd like put the order in the pit right at the end of the day. So really, like, I wasn't breaking the law by settling them where I was settling them. Like the law, like these, I wasn't breaking any rules. Yeah, it was fucking bad. It, you know, settling a call spread at 0 that's trading 6, that's not a good thing. But I wasn't necessarily breaking the rules because these fucking guys didn't know the rules. And because they were only targeting one thing, like it was getting really weird, you know?
Yep.
So the day that this is the fucked up part is that, so I'm so fucking clueless and I'm young, again, like, and this guy comes out of the rafters and he's like, "You fucking scumbag cocksucker, I can't believe you're doing this." And I was like, "Hey, like, dude, I'm just, I'm settling it to my model, And he's like, "What are you settling it to your model?" And I'm like, "Well, like, there's call skew here. There's, even if you go on a, Black-Scholes, early analytic, like even on flat sheets right now, you can't really justify." And the guy's like, "You want to talk to? I'll tell you what. You want to talk about fucking skew? You want to talk about model? I'll get on the phone over here right now. I have Myron Scholes on the phone right now. He wants to talk to you." All right. And I'm like, "Who the fuck is Myron Scholes?" And he's like, and I'm like, "Dude, listen, I don't have time for this shit." And the funny thing is, and I go over to Doogie, like, and I was like, "Hey, bro, like, this is starting to get really weird. This dude, Myron Scholes, wants to fucking talk to me on the phone." And he's like, "Are you shitting me, Myron Scholes?" And I was like, "Yeah, is that a guy? What is that? Like, is that a man?" And he's like, "Yes." He goes, and I, like, when people, like, I had such little time to learn all this shit. Like, when people were like, "Oh yeah, this is the Black and Scholes model," I swear to God, I thought it was the Black EN Scholes model. Like, I just thought it was like one word, like Black and Scholes model. Like, I didn't know it was there was a guy named Black and a guy named Scholes that did it, So when this fucking, and you know what? It was Myron Scholes on the other line wanting to fucking chew me out for this shit. And and the guy came down. He's like, "I can't, I can't believe you fucking, doing this fucking bullshit. You want every customer to leave this exchange. That's Myron Scholes." He's, and Doogie's like, the next morning he came in, and Doogie, I could just tell he went into like one of his dark night, like, thought processes when I told him that. And the next day he came in, he's like, "Dude, long-term capital is fucking, this is long-term capital. Myron Scholes is with them. They're underwater. Something bad is happening. If they're doing this shit, like, we gotta flip this stuff quick." And this is a whole different ball game. And then very short, Doogie turned around. Both of us turned around, like, from that day forward and stopped fighting it. And that's when the Fed and long-term capital came out and was like, "Oh yeah, we're about to collapse the system." And then Eurodollar started rallying like crazy. Stock market came off, and then the shit show started. And it wasn't until like much after that like we were all hanging out in the pit, and the details of like their debacle came out, and it was like blatantly obvious that like they had told the Fed that they were about to like blow up and destroy the entire like system, and that they had like $1 trillion worth of risk on, and they were systemic, and it was an issue, and the Fed totally let them fucking keep trading and let them do this like call spread, and the fucking call spread almost filled in it before all was said and done. But it's fascinating, but it's always gave me a unique perspective after that. Like, nothing is off the table with these guys. Like, if you think there's rules, every rule is a gray area. I mean, the fact that they let long-term capital come in and trade the markets and like hedge the debacle and then announce the debacle to like lessen the blow, it just tells me that, like, hey, these guys will, the house never loses, so it's tough to fade them.
That's a great line. Okay, so that actually lets me segue really nicely into one of the questions that Death Swap posed, and he says he wants to know how you would have handled the LME nickel trade cancellation debacle. I'd love to hear your perspective of why do you walk us through what you think happened there and what you think should have happened, and whether it has any long-term repercussions for that exchange and that product.
Well, it just seems like a common theme lately, like this, like it seemed like when Citadel kind of got bailed out of a lot of their like call options on these meme stocks that blew up last year, and then there's like this theme where they're not going to, like the hierarchy or the higher powers to be, they're not going to allow, like, it's not really free markets. It's free markets as long as it doesn't get fucking ridiculous and fuck up the big guy, not the little guy. The little guy is sacrificed. Like, first of all, I'm the little guy. So like in that situation, like I've been fucked like that. I've been fucked before. We've all dealt with, MF Global and just scenarios that are just, you can't believe they're happening. They're so unjust. But, I don't think of them anymore as like, oh my God, the markets are this or the markets are that. I just anticipate them at this point. I realize that shit happens. It's bullshit. It's fucking insane. If you actually stopped and thought about it or investigated it, it would be, like no one would be able to justify it or come up with a decent reason, other than the fact that like, hey, we're gonna, we'll collapse, producers that we need, or so, you know what I mean? Like, but I don't. How would I handle it if I was caught in the middle of it?
No, meaning if no, because in terms of, I'm more about like, what do you think the exchange should have done? This big shot got caught short, and like, do you think just let it trade? Like, is like free markets for free men?
Hey, they'd let it trade if I got caught short. They'd let it trade if you got caught short. Like I do not agree with, no, you take the pain or whatever. You blow up. There's, so what? So you blow up. There's plenty of like, people that'll come around and pick up the scraps and take it from there. Like I disagree. Anytime you like, when you step in and you start busting trades like that, I mean, Jesus Christ, can you imagine if you're, like they're probably busting some trades for some guys that are only one side of a, and they, now the guy's going from like a once in a lifetime trade to a fucking abortion that's like about to blow him out. Like how is that fair? How is that fair?
He might have been long and then they halted it. They like, think about it. You're long, you wait to sell it. Then they go and they halt it. They then tell you all those trades are halted. They then take a week and a half to open it, and it opens and goes straight limit down for 4 days.
How is that fair?
Yeah.
I mean, but you know what? In the same respect, like that's why I feel like the Fed is like kind of balls deep in equities right now. Like they could do the same. They can pull the same shenanigans like on the stock market where, and I don't mean like they'll like do anything overtly crazy like that, but they may be like dovish at a time where, like they've already done it, but they may keep that dovish posture and everyone may be scratching their head and being like, what the fuck, are these guys crazy? You know what I mean? Like, but like if scenarios like that has taught me anything, like the higher powers that be, they don't mind like looking you straight in the face and bullshitting you, and as you're like, what, I went to Wharton. Do you realize, this makes no sense. They don't give a shit. They'll, and you have to prepare for that. And that's like more like a street smart type gambler thinking about the markets than like an intellectual genius that's like,
yeah. I'll tell you, when I'm a stock trader originally, and when there would be eventually, we anticipated when a stock moved a lot, we wouldn't go and do the arbitrage against the stock in New York because we knew that the Toronto stock trades would be canceled. So ironically, like the bad prices would get even worse because nobody would want to sell it. Okay, listen, we talked about your bad trade. Henry Crinkle wants to know what your best trade ever, and also he wants to know, have you heard from Chad lately?
No, I haven't heard from Chad. First of all, no one's heard from Chad. Even after the Chad pod, and I heard like from like 50 traders I used to trade with that knew Chad, even a dude that lived with him. I was like, so where is he? Like no one knows, which is not shocking. That's what the way it should be. No one should be have any idea where Chad is right now. The guy left the fucking building with like $6 million. He was 23 with a bad weed habit. Like he's in the woods.
You know what? He's probably figured out crypto and he's worth $6 billion now.
You know, that could be. That could be. He was that type of freak. And yeah, then he's really deep in the woods. Now he's in a bunker. Now you're never going to see him.
Okay, so what's your best trade ever? I know that some of us are kind of superstitious and don't like talking about them. So I completely understand if you don't. But would you share like some details of it?
My best trades have always been like the same trade, an option trade. Like it's like the biggest ones I've ever done are in the $0 options, like the call 1x2s, where guys have like come in and, you know, picked like a 25 tick wide and done a call 1x2 where, you know, they're like buying one call, selling two, and I'm taking the other side of it. And when then when the, you know, the shit hits the fan and you blow through both strikes and then vol kicks in, you know, those are the things. Those have always been like the structures that have been like my best trades. And it's always been like long, you know. Like I made all my money short vol when I first started trading, and I couldn't imagine why anyone would ever be long vol because they always sucked. And then I blew out short vol, and then I started buying vol, and then I realized like, oh my God, like, okay, so you're only right like a couple of times a year long vol, but when you're right long vol, it's like a career's worth of money. You know what I mean? Like, as opposed to being short vol and you're just like, yeah, you know, thousand. You know, like, so like my best trades have, well, you know, and I bought a lot of call 1x2s and I bought a lot of the market, you know, 2 years ago when we were talking. Like that was, you know, like my most profitable trade was probably getting long while everyone was freaking out during COVID.
So can we talk about, now that that's where like 2 years in the past, I'd love to talk about how you actually packaged that trade. Did you do 1x2s? Was that how you expressed it?
Yeah, I attacked everything at that point because I was so confident that it was happening. A lot of times though, like, you know, when I'll attack the market, if I want to be super aggressive, I'll go to like the weekly expiration options in the ES. Yeah. Because they're just, you know, they have less of that like that vol component to it and it's more directional. And they're easier to manage the, you know, the risk components to it. When it comes to like upside calls, a lot of times there isn't much call skew, you know, so like call spreads or, you know, a lot of times it depends if I feel like the calls, if there's any skew whatsoever, I'll go to like wide call spreads. I'll buy call spreads. But if I feel like it's kind of a flat skew and they're not, and this is often the way it is, because when you think about it, like most vol traders, if they're gonna buy a call and they delta hedge it and sell like, you know, underlying against it, and then you move up there, most of the time vol is getting crushed as you're moving up, and you end up like kissing your sister, you know what I mean? Because your call goes up, but your call goes up, but vol is getting crushed. It doesn't go up that much. Your hedge is there, and next thing you know, it's like it just kind of like pays for each other, you know. That's why like that. That's why it's hard to get that call skew. You know, we go down, it's always going to get scary. We go up, it gets less scary. So there's never much call skew. So that's why I you know, like on the way up, I sometimes I'll just dig into calls, but I'll dig into short dated calls. I don't like the rich stuff. I don't like to babysit positions anymore. I like more short term stuff.
Okay. And now let's talk a little bit about VIX. And I was listening to one of your other podcasts, and you were talking about how you like to trade volatile markets, but a derivative of it. And that's slower. And, you know, a lot of times you talked about the flies in the VIX. Why don't you, if you could, walk us through how that works, how you trade it, and what you're looking for, and where your edge is, you think, in trading those markets.
Right. And this is like really simple. And this is like a great thing for anyone to be able to look at. You can pop up a VIX curve and look at like, and I really like the most important part of the curve is probably like the front 4 months, which is the front 2 spreads and the front 2 butterflies. And so, the VIX curve is obviously like, when it gets less scary, it's in contango, and when it gets scary, it goes into this like backwardation, like and it flips up in the front and gets nervous. So basically, it's not like I try to value like where we are in the middle, but I do like when like right now, say today, for instance, like this is one of the reasons. This is one of the ways I'll use it. So today, at the end of the day. Obviously, we grind up and the front VIX spread starts trading up into that like 70, 80 area, plus 70 area, is plus 70, 80 area. That, which is like, which is kind of like they're pounding the front of the curve. They're pounding, so you can sell like fat positive spreads, or you could sell like a fat positive butterfly to hedge kind of the downside or the anarchy that might ensue coming off this resistance point. Now, when I say like the way I use it, like I look up at the VIX and say, okay, so I can sell, like I could have sold the front spread at plus 80 ticks today. That's pretty fat for a market that just ran up into resistance. I would expect it to be more flat. I would expect it to be more people like, I don't necessarily want to sell you vol right now. You know what I mean? We're in resistance. The chances are everyone's bearish. The chances are we retrace from here. I don't necessarily, like I'm going to make you pay up for it. Well, like from, a positive 70, 80 like front spread allows people to like hedge anarchy. So when I see that, now I think to myself, okay, even if we drop from here, I know like guys have been allowed to hedge the drop up here. Like vol got cheap enough, especially in some of these structures in the VIX, some of these spread markets, they can hedge that shit. So like now, if they couldn't hedge that shit, if there was a divergence, if we came up here into resistance and those spreads were never able to go positive, they were never, then I'd be like, holy Christ, like who knows what the fuck is going to happen now? But it gives me time to pause because I know guys have hedged now. So now I'm like, all right, if they're hedged, then maybe anarchy is off the table, because they never let you hedge anarchy, or they rarely do, especially in the middle of like possible anarchy. So I would expect even on a retrace from here with these vol levels and the way people have been able to hedge, I think like that 43.20 area has a decent shot at holding, and we go up from there, and form that bottom and break that sequence of lower lows and lower highs, and really start turning a lot of these models upwards.
So Jimmy, you use it to give you clues about what's going to happen in the underlying market. Do you have like a core position that you'll have to earn the carry, or something where that you'll like a go-to position that'll pay some bills? Like how do you grind yourself a living while you're waiting for the big opportunities?
Yeah. Well, you know what? Like it depends on the environment. Like last year, like it all year long, like we just kept making like the same patterns where we would I would just wait for that one day where we were off a lot in the morning, then we'd come up and we'd go into, I'm big into like standard deviations. So we would come up into like whatever, a one standard deviation move, 50 points off the low, and I would sell like upside call spreads at one standard deviation. Like that was kind of like my bread and butter last year. And I just kept doing it and doing it and doing it, because I knew like we were, we were getting kind of towards the end of this thing. The Fed started talking there, but there was still a lot of juice in the system. But now I'm not really that comfortable with an option position unless they give me it cheap. Like the only position I'm willing to do right now is like if you give me a fat VIX spread, I'll sell it versus like like an S&P long at a very low delta to the long, like 10 VIX spreads to 1 ES future or something like that, like mixture. If you give me that type of thing, I'll do that. But I'm not in this environment. I'm not going near. I don't care how fucking expensive it gets. If vol gets really insanely expensive, and sentiment gets like really really shitty, I'll just start taking shots on buying S&P futures where I think like they'll hold. Like I'll use that sentiment that way. But but I don't take that other side ever anymore. Especially not in this environment. I don't take the sell side, I should say.
Okay. Okay, let's go with some more questions.
And when I say like my bread and butter, like all year last year, I would only sell like 5 tick wide S&P spreads, but I would just sell a lot of them. So if I thought like we were going to top out in an area, I would just go 10 handles higher, and I would sell like that 5 wide call spread for a lot of them. And then I know what my downside is. It's a call spread. It's 5 ticks wide. You know what I mean? There's my pain. There's, that's the type of bread and butter. When you talk about bread and butter trades, those are the bread and butter trades that I like, not like, hey, not an opinion and, I think it's going to go up from here. And now I'm buying support and I'm, getting long, you know what I mean? I don't trade off like my opinions that much.
Fair enough. Okay, I'm going to shoot a few last questions here at you. Tim the MM, I guess the market maker, wants to know what the best lunchtime cocktail from Ceres Cafe in the CBOT lobby. But you weren't a CBOT guy. You were a CME, right?
Yeah. I heard this. You know what's funny is I just know what those guys drank. They just drank like vodka. Like, I don't even know if you could get anything other than like just a glass of vodka at Ceres. Like that's what, if you ordered anything else with your vodka, you were getting vodka and then you were just getting a splash of whatever it was. But you were getting a triple if you ordered any cocktail there. That's yeah. And I've been there a couple of times and I don't remember leaving, but I do,
I don't remember. Okay, Bluey Capital wants to know how he can age like a fine wine like Jimmy seems to. I tend to agree. Most of the time when I think about traders and I think about who's going to play them in the movies, I think they're going to have to get some movie star. And I look at you, Jimmy, and I go, my God, this is the only guy that's going to be, he's movie star good looking on his own.
Hey, first of all right. Someone said the other day that I look young for my age, and I was like, you know what? I fucking earned that, motherfucker. All right. If you look young for your age, that means that means when you were 18, you look like you were 15 and you got your balls busted bad. Like this is my time. This is like when people, you deal with a nightmare when you're younger. But now, like, the world comes around you. You're like, holy shit, I still have my hair. Yeah. I'm not even that gray. I can't even, but I earned that, okay? With all the puberty jokes. When I was 16 years old, I earned that hair.
Okay. Let's go with the final 3 questions here that I ask, or 5 questions. We're going to go with them all. So we're going to start with your favorite investment book.
All right. Well, I've tweeted about investment books, and I think the tweet was that I've never really read any, because I do so much research that by the time I'm done with the research, the last thing I want to do is read about some asshole's opinion or some research, some fucking book about it. But I lie, and when people ask me this, like the thing that I always lie about is my favorite book is Reminiscence of a Stock Operator, and that was my tweet. But I actually did read that book.
I was going to say, do you lie because you don't read it? Like you haven't actually read it?
No. I used to, like when people would say that to me, like, what's your favorite book? I used to always go with that one. even
Okay.
though I hadn't even read it.
Yeah.
Just because I didn't really have any answer to this question. But I actually did read that book, and I was pretty horrified, actually.
Why?
Like, because that's like okay, fucking amazing guy. All right, amazing guy, amazing trader. But his it's disturbing in the same, because like I know a lot of amazing traders, and they're all kind of fucking disturbing. And you think to yourself, like, Jesus Christ, like how weird do you have to be, or how fucked up do you have to be to really like make this work in a are we like the fact that it ended the way it ended, and how the guy was kind of a tortured soul, and seriously, like my mentors and the greatest traders I've ever known, they're all kind of tortured souls too, so when I like at the end of that, I was kind of like, all right, Jesus Christ, I don't want to be a tortured soul. I don't want to go down that route,
I see. So the fact that you think they're truly great traders, and I think I got your tweet here. I'm just looking through my notes here. It says most traders fail because they are head cases. The freaks that kill it are mostly pricks and narcissists that don't worry about failing, but those dudes are tough to be around.
Right, they are. But you know what I mean? Like, so it was like it would be great to read about a normal guy, like that, that made it, and and I guess like one guy, I think his name is Marty Zwig. I do want to read his book. Like I find his. Did you ever read anything by him?
Oh,
like,
for sure. Marty's awesome. He was the guy who got on Wall Street Week right before the crash. Called it. He's the fellow that originated "Don't Fight the Fed." He was basically the first of the quants. Absolutely fabulous, analyst, and I highly recommend anyone that's interested in the markets to go read it. Yeah. So listen, actually, sorry, go ahead, Jimmy. No, you go ahead.
No, I like. I'm not against like reading about this shit. I just the fact of the matter is like I actually got like firsthand like mentorship, like my career, like when I worked with these people, like I got to ask them. I got to ask Doogie a million fucking stupid questions. I got to ask Margie Teller a bunch of stupid questions, like, and I got such a personal like experience from talking to these people. It's and such like some of the greatest traders that have ever been, that it's hard for me to read books, like.
I completely get it. Listen, I do have a question. You mentioned the mentor. I was listening to you, and you said something that you're still looking for your next mentor. And I thought to myself, what the hell? This is Jimmy Jude we're talking about, and he's thinking of still looking for his next mentor. I would love just to kind of understand your thinking and why you said that.
Well, like right now, first of all, my next mentor, could be one of two people. Like, first of all, I don't really know the inflation story that well. I was really young the last time we had inflation. The only memory I have of it is like I could get 4 candy bars for $1, and then all of a sudden I could get like 2 candy bars for $1, and it was like, what the fuck, like that, those are your memories in the 70s. Like, so there are some guys on here where I like I need a mentor to like guide me through this inflation scenario, and I don't know if they're alive or if they're all dead, like who the fuck is left? Do you know how old you'd have to be to like be able to speak about that intelligently? I think the only guy on here that like is that like I think his name is Nick.
We had him on this show. He's not that old.
But I mean, he has an opinion, at least, of the 70s inflation scenario. He has an opinion. These other guys, like, I have, they're like, the yield curve's inverting, the Fed's going, the world's coming to an end, and it's like, hey, dude, have you been in this scenario before? First of all, the yield, you know how long it takes for the yield curve to invert? It inverts, then it's 3 to 6 months of everyone explaining why the inversion doesn't mean anything. Then it's another 3 months arguing with each other over the fucking, like, no, this is, you know what I mean? Like, it takes a while. It's not just like, hey, this thing looks like it's about to invert, and like like sell everything. The world's on fire. No, this shit takes time. It takes time, and that's why that's why these squeezes happen. Guys get way over their fucking skis on these thoughts.
Okay, you're making me laugh so hard. Okay, next question. Are great traders born or made?
They're born.
Yeah,
they're born.
You don't think you can make one?
Not from a fucking head case. I mean, if you give me a guy that's and it doesn't even mean here's a absolute fact. I worked for First Continental Trading, top one of the top traders in the firm, Marco Federici. I don't even know if he got out of high school. Fucking street smart, super wise. Like, this guy could maneuver he was like one of the biggest future traders in the Eurodollar pit. He was fucking magical. Okay. And then as this dude is like going and killing it, Roger Carlson, the owner of the firm, goes and hires this dude from MIT, Vikram. Oh, this guy's amazing. He was Harvard undergrad, MIT, math genius. Cocksucker loses $11 million in the first 30 days he's with our company. And and Roger's like, hey, listen, would you guys cut back on your risk? I'm moving some numbers over here, Vikram. And it's okay, that's born, or, I'm telling you, some dudes have it and some dudes don't. It takes a certain type of confidence and moxie along with intelligence. And, not everyone has it.
Okay, right. Next question. Don Cox used to say that you shouldn't invest in what's on page 1 today. You should go and find the page 16 story that's on the way to page 1 tomorrow. Do you have a Don Cox theme for us?
Sure. What's on page 1 today? Inflation, hawkish Fed. We're all fucked. This is just a squeeze. You know what I mean? If anything, the surprise is to the upside. The surprise is to the Fed, slow playing this thing, and people screaming, the surprise is what if inflation numbers start down ticking? They already have cover for the next couple meetings. They can, these guys have no shame. They, you saw Biden the other day, hey, you wanna blame inflation? Look to Putin. I mean, how ridiculous of a comment was that? But you have to realize that this Fed, what people are underestimating too, they're much more aligned with this administration. And that, in 2018, when Powell made that policy error and was too aggressive in December, you have to remember the scenario. He was raising rates, and Trump was like, this is the greatest economy in the world. No one's ever done this, and this asshole's raising rates, and he need to be, he almost pushed, I would have done the same thing if I was Powell. Okay, motherfucker, you got the greatest economy in the world. Here's 25 basis points and a hawkish statement. See if it can take that. Oh, look, it can't, bitch. You know what I mean?
Trump kept telling him that he can't putt. Remember?
Right. You know what I mean? This, but think of this though. Now you got Biden, who's this compromised old man. You got a vice president that's just fucking completely inept. This administration's but you have Yellen in, and you got Powell. They're good buddies. They don't want, and they know they're the only ones standing between this and having that asshole back in office, screaming, look what he's done to the stock market. Jesus Christ, I had this thing up in I had the greatest economy, the greatest, and I have a feeling what we're seeing here is a defense of that. There's that quiet defense of that, nah, fuck you, asshole. We're going to give the old man a little bit of leeway here that we wouldn't give you. Because we don't like you, and you busted our balls. You know what I mean? No one likes anyone that busts their balls all the time. You know what I mean? Especially, yeah. So I think that there's a component here that people are underestimating. There's a reason that they're head scratchingly dovish when they should be extremely hawkish, and that is because they're going easy on this administration. They don't want to. They don't want to push this thing to that point.
Okay, so that's the surprise for next.
Especially during midterm elections, by the way.
That's right. Okay, so the other one that the great strategist that we talk about is that Byron Weed. He used to talk about his top surprises for the next year, and he defined a surprise as something the market assigns a less than a 1/3 chance of happening, but he thinks is better than 50-50. I know you just came up with one that's almost a Byron Weed surprise, but do you have another?
I would think the other thing, like the other thing, like I think the pricing in of like Eurodollar out on the curve, like all these hikes, I think that will become like, if there's a something that's mispriced and snaps back, they always price in too much in the curve, especially in the front end. They go overboard. So I think like maybe my Byron Wayne thing would be like that the Fed doesn't hike as many times as the dot plots suggest, and that they're not as aggressive. And
Oh, that's a great one. I was going to actually ask you, because there's a huge, not only is the curve really steep at the front end, but there's a huge buyer of puts, a monster buyer of puts out there that has set the implied vol and the puts queue through the roof. Yeah. And they're all like, I think there's a great opportunity there with you. So from your lips to God's ears, Jimmy, because I hope it works. Now the final question for you. Oh no, wait, wait, before we do the final question, very important here. Freestyle Naper, I'm not sure. He actually, he or she, I shouldn't say. Well, most guys on FinTwit are he's though. He wanted to know your dream car / vehicle all-time best beach parking lot winner. And I was the same way. I had already warned you and said we got to talk about this. For those who don't know, Jimmy lives in Florida, obviously, and he once a week he tweets out the beach parking lot winner of some fancy either truck or convertible of something he likes.
And all those cars that I see are just like, like cars that I see on my daily, like cruising around, whether I'm going out on a jog or riding a bike or, so they're all like, they're other people's cars, they're just like the cool, but they're really like Florida has such cool rides and I love them. Like the one that I really, really, really want, that I'm looking for is like my dream car would be like a 72 S10 Blazer, Chevy Blazer.
Okay, I'm gonna Google this while we're doing this.
There's one in town, and I've been stalking the guy. He lives on Jupiter Island, and the thing is, and it is such a perfect reproduction. I kind of like looked it up and to see what he paid for it, and apparently it's like it's got like a couple hundred miles on it or something, and the guy paid like a couple $100,000 for it.
This is an old truck. This is an old SUV for those who don't know it, and it's just all the rage. And $200,000.
I want like my son loves old crusty shit. He doesn't like new stuff.
Yeah.
So he's like, we're looking for this truck right now, and he's like, but I want it. He wants it crusty and a little rusty and showing some of its age. And he's like, and we don't touch it. That's the way we drive it. And I'm like, all right, I dig that. You know what I mean? Let the hedge fund guys have the perfect rides. Okay. I'm a little crusty. I'm a little rusty. You know what I mean? That kind of goes along with me. Right. Nice. So it's perfect.
So for those that are listening, if anyone has a little crusty and a little rusty, what does it have to be? A Blazer?
A 72 Chevy S10 Blazer. I mean, okay. C10 Blazer.
Make sure you reach out to Jimmy. He's looking for that. Okay.
Right.
Final question for you. A young person starting in this business today, what advice or kind of what would you tell them?
Well, first of all, there's like so much access to the markets. Like you're already like way, way, way ahead of the game. But unfortunately, like being way ahead of the game when like you can open up a Ninja account with a couple $1,000 and start trading micros tomorrow. That's a great thing, but it's also kind of a nightmare because you don't know what the fuck you're doing. So you have to, and it takes a while to figure out the way you're doing. What to do. Yeah. So finding the right mentors on like Twitter if you're working at home and you're remote and you don't have that can be a great option. There's a lot of great guys out there that you can learn a lot from. If you're starting like from scratch, I would say, and I've said this a million times, don't let this, this is not a career. Don't let this, it, this is a side gig, and you'll trade better if you have other avenues for revenue. If you have other gigs, I don't care what it is. Like I said, like I don't care if you mow lawns and you trade on the side. You have a better chance of making a lot of money trading if you're mowing lawns on the side than if you're just sitting there in front of 6 screens like a genius. So always, like in the beginning, always have other avenues so you don't put all that pressure on yourself. But if you really want to go like full hardcore into it, then like you need to find a prop firm, or you need to find a fund, and you need to, because in there, those guys, they're mentors and older guys that you sit down with and you're sitting next to, and they're sharing their experience and stuff. They can send you light years ahead in your learning process very quickly, just by talking with them. But the one component that you're not going to be able to get, other than a full-on commitment from yourself, is sitting in front of the screens and getting that screen time and looking at all these patterns and looking at all live time, and even if you're just putting on one micro, just having that skin in the game and having that little risk is totally different than just watching it. Because you could watch a chart for a month and be like, oh, I'd sell them here and I'd buy them here and I'd sell them here, and you'd be like, holy fuck, like I got this. This is amazing. Yeah, well, go put on one micro. And manage your risk, and then talk to me in the next month. And I guarantee you're a shell of yourself and nothing worked and it's all it's a nightmare. So that component, there's not, like, I wish you could just dump someone's brain into your brain, and but that seeing the patterns and seeing the setups and all the little different nuances, that takes time, man, and it takes commitment, and and it takes that pain and that that fucking aggravation of sitting there through it, just staring at it, so.
Okay. Well, listen, Jimmy, you are such a nice guy to share all of your information and all of your knowledge. You're doing this. You have nothing to shill, nothing to hawk. But why don't you tell people where they can go and reach out to you? I take it you prefer Twitter.
Yeah, Twitter, Jimmy Jude 13 at Twitter. I did actually, like the last time I was on here, I talked to you about like I was writing a book. I wrote the book. It's done. It's edited, and I'm like shopping it right now with different publishers. Right, I actually have something to show.
Oh, that's awesome.
But you know what? Like I'm not even shilling that. I mean, like, you know what I mean? Like I think it's an interesting story about when I first came to the floor, and it has a lot of really good like floor stuff in it.
That's awesome.
About the flavor of the back in the day.
When you get it published, you just come on, and we're going to be more than happy to chat with you and help you sell your book.
That would be awesome. That would be awesome.
That's terrific.
No pressure, you know what I mean? No pressure. I'm not telling people run out and buy this thing, whatever. If it's your bag, I think you'd enjoy it.
Okay, that's great. Awesome. Well, we're looking forward to it. I can't wait for it. I'm sure it's going to be awesome. Thanks again for your time, Jimmy.
Thanks, Jimmy.
Thank you, guys. It was great talking to you. It always is. I really appreciate it.
Let's not make it another 2 years before you come back on, though. Okay.
Absolutely. Just put the heat on me.
All right.
All right.
Have a good one. Cheers.
Good night, fellas. Have a great weekend.
Okay, Patrick, time for talking charts. What say you?
All right. Well, let's get through those top 3 things we were watching last week. Okay, so we were watching that U.S. dollar, right? And it was rallying straight up into the new highs, or approaching new highs when we started the week. And really, in the post-Fed period, dollar taking a bit of a break, but we're still above the 98 handle. Do you think that the Fed could have marked some sort of short to intermediate high in the dollar? Because things like the yen, U.S. dollar against the yen, continue to be so strong.
You can always tell when Patrick hasn't read my letter when he asks me questions like this. Yes, I think that the Fed might have marked the top of the U.S. dollar.
Well, actually, I read it, and I was just throwing you the pitch so you could hit it. All right, so
I don't believe you, Patrick.
It's the truth. It's the truth. Why would I lie?
I'm like Ron Burgundy. I don't believe you.
Number two, we were talking the OPEX. Obviously, there was like a $3 trillion of notional rolling off of there. It did create volatility, but the volatility was actually to the upside, and the market did really kind of rip off of their highs, which really did create that. And then we'll talk some charts on the markets here in just a moment. But it did have some volatility. And number one, we were talking.
Whoa! I gotta give a big shout out to you, Patrick.
Okay.
Not only did you write OPEX, you also said it.
I know, that's impressive.
There was no OPEC
I have a
involved
lot
there
of
at all.
dyslexia with OPEC and OPEX. That's thank you.
Hats off to you, buddy.
Thanks for the shout out, buddy. All right, so number one, the FOMC, pretty much they gave the market the rate hike they were expecting, but they seem to have that a pretty hawkish tilt to the path, right?
What was interesting I found about the post FOMC pattern was that a lot of times they always take it the wrong way first. Like they'll take it one way and then it'll go the other way. That one was up, down, I think, if I remember right.
Yeah.
There was a lot of volatility in that market. It was all
But it was
over
just
the map.
it was just for the first 20 minutes.
No, even then, we had the statement, went down, and then we rallied back up. I think that there was a lot of volatility, more so than most, up and down.
Yeah, and it was after 3 o'clock though that was that the really started to trend. But that 1 hour, that 1 hour between 2 to 3, when between the initial statement and the first words, there was definitely some whips. You're right, but that was just kind of reactionary noise as traders are positioning themselves.
You can tell who trades a little bit longer time frames at times. That's just reactionary noise, no problem at all. Meanwhile, the rest of us are like,
everyone's getting grinded by the whips. All right, let's talk about the top 3 things to watch next week, and obviously, let's talk China. And China, well, we got to kind of talk about what was going on with China before the midweek, because when you look at, let's say, I'm going to just use the China A50, but prior to that midweek reversal, we were basically seeing a free fall in the Chinese stock market. And so just to put it in context, since December, the holiday season, from top to bottom, we were off 26% on the China index in that span of like 3 months. But just the final 2 weeks, sort of this period since March 1st, we saw a drop of like 17-18% in virtually 2 weeks. The China market was completely just nosediving. The internet stocks were eating it, like all the China internet names. Obviously, there was a lot of stress points about what side China's going to be tilting towards the geopolitical circumstances with Russia. And then came an announcement in the middle week that kind of was whatever it takes moment for Xi Jinping, right?
That's a great way of putting it. It very much did have that kind of Mario Draghi, whatever it takes moment feel to it. And what's interesting is that Jimmy just talked about this, and he thinks it was actually a bigger deal than the market realizes.
Yeah, and so to me. What is the one thing to watch this week? Okay, so whenever you get a big announcement and such an incredibly oversold market, so we can clearly identify that China's been in a bear market for like a year. Like this, when you have this kind of like their stock market off the May high is off like 35%, and it's been selling for almost an entire year, right? So that's the basic. That meets all the criteria of a bear market. And always when you have such an incredibly fast market drop, like dropping almost 20% in 2 weeks, inevitably it bounces. And it was given a catalyst, and it did bounce. But to me, it's about once the bounce occurs, does it follow through in the subsequent weeks, or does the smart money fade it and start settling into the strength? And one of the kind of more meaningful things is not the fact that it reversed in the middle of the week on that news, but next week, whether or not the bulls keep buying it is what is going to be a real big tell to me. And so I'm going to definitely be watching that. Is there any insight you want to add to that?
Nothing. I do agree with you though that China is one of those markets that is very much going to dictate a lot of how the rest of the world trades, and that you should keep your eye on it.
Agreed. So, and our number 2 thing to watch is this a big buy on dip on commodities? And so the tail, like, okay, whether we look at wheat prices, whether we look at gold, whether silver, whether you look at copper, whether you look at oil prices, everything. What we saw was 2 weeks ago was just this monstrous melt up driven by the whole geopolitical shit show, right? Let's not get into the actual talking about of that, but obviously everyone knows it's there. And then commodities all seem to, within a couple days of each other, put in some sort of short-term swing highs. And some of these mean reverting corrections that happened off those highs have been violent, particularly oil dropping like $30 off of its highs and things like that. But commodities are in a bull market, and corrections happen. And so now that we've seen such a violent correction, one of the things to watch is that now just a new buy on dip? Do you have any thoughts on that, or is it more cherry picking which commodities? Like, do you have?
For me, I feel more so that I'm inclined to cherry pick the commodities, and that we're not in an environment where you can just buy them all so across the board.
You don't think that you can just go and do that, like the DJP, right? So like
I don't think there's anything wrong with that, but I think that there's a lot of I still think that some of the commodities are still overowned and crowded. But I understand I'm alone in that feeling, and I still worry that we have a lot of weak longs in the oil market and the wheat market, a lot of like true macro.
Yeah, but like you're just playing on the time frame, because like are you, yes or no, you remain a big picture commodity bull, right?
Yes. Okay. Agreed. A year from now, it's going to be much higher.
So what you're doing is you're highlighting the fact that everyone got a little too excited too quickly, and you're just thinking that it kind of blew off a short-term top.
That's correct.
And that it's got more mean reversion risk, and that could be longer, more prolonged, as it got to wash out all the weak hands.
Yeah, I just think that there's better things to own than to own the one that everyone else owns. And I'd rather buy the commodities that nobody owns.
Having the thesis that you have right now makes a lot of sense. But one of the things, and why I think it's worth actually talking about it as our top 3 things to watch, is that if in fact this is one big kind of parabolic rise in commodities, if a short-term low is established next week, and all of these things start ripping higher, we could have a melt up in commodity prices on the upside. Now, that may not be the probable outcome, and that may not even be the one you want to anchor off of, but watching how commodities bounce off of the short-term lows is going to be pretty important, and I wouldn't want to be fighting it with shorts if things start getting a little bit
listen,
aggressive.
I don't think you should short any commodity out there.
And I agree with that. So that's the key. That's the key on that is that it's just about whether you're more neutral or how long you are, right?
Yes.
And so the last thing we were going to ask in the top 3 things, is there a bottom in those tech stocks? And what's interesting is we spend a lot of time talking about the NASDAQ chart or the S&P 500 chart, but the NASDAQ chart doesn't even really reflect how ugly it's been if you've been in unprofitable tech, or even Chinese internet stocks, or any of these things like the ARCs, and they have just been bled out massively, right? And ARC hit its high back in the first quarter of last year. So we're down talking over a year of pure selling on ARC as it basically wiped out from $160 down to like the low 50s. It was a 67% wipeout in a year. And we're getting bounces. Now, that doesn't make a bear market over. Bear markets can last years and the selling may ensue. But it has been an ugly 2, 3, 4 months in this space. And everything inevitably bounces at some point. Do you think maybe it's a tradable low down here that leads to a multi-week rally that could see some of these things kind of, gain 10, 20% on the upside off of their worst levels?
Yes, I think it could happen. But to me, I think there's better things to own than that, because if you're wrong, it goes back to just melting, and the edge is there's better stocks that have less risk in terms of fundamental risk, and you're not just playing a trading sardine. And so, Patrick, I know I see a lot of people going out and buying, like when they get bullish, they go buy ARC, and I'm like, why are you buying ARC? Why are you buying the last leader? Why wouldn't you be interested in buying the next leader?
Well, okay, so
to me, it just feels like
would you go join Ackman in with like Netflix or something?
No, I think you should go buy the next leaders, which I don't think are going to be technology at all. So yes, do I think that they're oversold? Do I think that there's a big short interest and that we could have rippers? 100%. Do I think that there's better risk rewards out there? 100% as well. I just think that there's better things to own. And so I just don't like it. I don't like buying the shitty trade, the stuff that I expect a year from now to be even lower. I don't like going and buying that I'd rather buy the stuff that I think that it's going to be up in a year's time. That's just how I feel, but everyone's different.
All right, so let's use this as our opportunity to just start talking some charts, because really what's been fascinating about what happened in the last 48 hours, I think what tells the story is if you just look at the percentage gains of two things. Take the equal weight S&P 500 is up 0.64%. It's up,
okay,
but it's only up 0.2%. While the NASDAQ is up 2.17%, right? So in the last 3 sessions since the FOMC, the tech and NASDAQ weighted stuff had the largest percentage gains. And things like aerospace, I'll use the ITA, was up barely today. You take some of the individual names like Raytheon down, like you take healthcare, Johnson & Johnson down today. Like there's a whole bunch of these stocks that are blue chip, they're fundamentally sound, good fundamentals, and they just didn't care that the market was ripping higher today.
Yeah, because it's a short squeeze today. I 100%
right.
agree with you.
But okay, and no, go on.
So I completely agree with you that if you're a trader trading on a day trading basis, that those are the things to own. But unless you can time it to the day, I feel like that there's better things to own, because when you're wrong, the consequences of being wrong or early are way less. So what I worry about is everyone buys ARC expecting this ripper, and yes, you will eventually get a ripper, but you could bleed, whatever percent. Like, let's go and pull up the K-Web. And everyone's talking about the K-Web, which is the Chinese internet stocks, and how much they've rallied. So can I see a chart of that? So Patrick, you could say that how much did this rally off the low right now?
Well, including the gap?
Just right now. Okay, 3 days ago, what were we? We were 20.
Off of that low to its high, 57%.
Yeah, sounds terrific, right? But that was a week ago. So if you went 2 weeks ago, where were you? You were higher than now.
Yeah.
So your timing, you had to be perfect on this.
Yeah.
And this is my point, is that yes, you are going to get, in bear markets, you get monster rallies. You get these rippers that'll that'll rip your face off, like that in Solomon. What was the book, Liar's Poker? You always talked about the guy ripping your fucking face off. That you will get those rallies that rip your fucking face off. But the problem is that while you're waiting for them, it's going to drip lower. And I'd rather buy something that just drips sideways. It just doesn't go up. So it's just a different way of trading, and I get it. I understand if you're a day trader, today was by far you should buy these. But if you're buying something expecting it to rally over the next week, you should be very careful, because what's going to happen, I think, is that these things are going to go, like, I don't know specifically about China, but tech in general, I think is going to be for sale for years. So the bigger question to me is, have we returned to a tech bull market in which these things will lead? And I unequivocally say no to that. I could be proven wrong, but I'm a seller of tech still.
All right. Well, you know what? I'm not opposed to the selling of tech, but I actually think that the short-term squeeze has got room to go, and I don't think you'll be adding shorts at least for another week or two till you see where the kind of upside exhaustion point is kind of reached on that. What I wanted to do, though, just to wrap up this talking chart segment, I wanted to just touch on the way bonds have been more or less trading. And I wanted to start off just so we have a reference point on that 10-year Treasury yield. Obviously, it peaked on yield on the FOMC day. But this is not exactly a big drop off of that high. Do you think that as with the way that everything is going, that yields can still press 235, 240 on the upside on the short term of this move?
Yeah, I think that this is... I think the long end of the bond market selling off will be the surprise that nobody's looking for, and that that I'm probably more bearish on that than any other asset out there.
Really?
Yeah.
Wow, the high conviction call. Maybe there's a bet in here. All right, but the 30-year yield. So you're like betting we're going 270, 275 or higher.
Well, I think eventually we're headed a lot higher, but I don't see any reason to get all excited about this. We have
because I mean there's some other guys on the internet. I'm not going to start naming names that smell that the policy error is going to lead to a recession, and that the long bond is actually the place to hide.
Of course, they've been saying that the whole time, that the COVID crisis is going to cause a dearth of expansion, and that you should own it from then, and you should own it because the Fed's never going to raise rates.
And so the macro tourist is basically saying, screw that shit. It's going higher.
Oh well. Okay,
I love it.
Could it go lower?
I'm trying to put.
Sure. I don't even know who you're talking about. I'm assuming it's one of your doom porn guys that you guys hang out with.
No.
But the reality is that we have what's inflation running 7%, 8%, and the Fed is, even though everyone's talking about how hawkish they are, they've risen like. They've raised rates once. So we're at a situation where there's going to be more inflation. And I could see a situation where the long end ends up revaluing their expectations about the Fed's willingness to accept long-term inflation. And the surprise might be that everyone goes, holy shit, Jimmy Jude is right. These guys aren't nearly as hawkish and as determined to fight inflation as we thought. Therefore, we have to reprice the long end of the bond market. And the other thing I think that, Patrick, one last thing is that there's been a lot of money that's been scared by the Ukraine situation. A lot. And if you go look at the Bank of America, what is it? They have a global investor positioning. That we are at a level where there is as much fear in the market about risk assets and about the economy as at the COVID bottom and other big events like that.
Right.
So the surprise will be the other way, in my opinion.
So I want to leave with just touching on the corporates and like investment grade bounce off of the lows, junk bonds well off of their lows, off of pretty sharp reactions. Do you think that these are going to fall into your same thesis of that there's more downside here, or could this part of the market have stabilized?
So the one issue is that obviously if you get World War III, all bets are off, and that's the problem.
Yeah,
right?
but I mean everything.
So let's just assume that we don't get.
That's a fair assumption.
Yeah,
because no one's really going to listen to this podcast if World War III started. So we're just going under the basis that everything's going to work out.
No,
right?
but even if we get saber rattling about NATO entering the war, that'll be enough. Like if the situation deteriorates, then you have to assume that geopolitics overwhelms markets, and that's all that'll matter. Because let's face it, it's scary. If that happens, it's super scary. I saw an analyst on Bloomberg, by the way, Patrick, that it was the lady from, I think it was actually from Royal Bank, that lion just follows me everywhere. I can't get rid, that lion's going to be in my nightmares. So she was talking about how she was an option trader, and she was saying that they don't even price in World War III into their analysis, because if it happens, there's going to be no market. And I was thinking to myself, actually, that's pretty good. That's pretty good thinking. Like, there's no sense pricing in that end of the world scenario, because if it happens,
no one wins in that. If you shorted that bet, it's like, what are you going to do with all your money after?
So you might as well not put it into the risk curve. Like, and I think, she's actually right. So back to your question. Assuming we don't have World War III, you were asking about the bond market. I think the bond market could go a lot higher in yield.
Right.
All right.
Now you heard it there. That's all I got, Kev, for talking charts.
Okay. Let's go on to
skin in the game, buddy.
So
you got me.
I managed to win one.
Yeah, but it's you know what? I can tell you is we priced the bet right, because it literally you ended up winning.
Tell people what the bet was first of all.
All right, so we were betting the S&P 500 futures, and we were basically saying the high-low range would be 300 points for the week. Basically, is it going to be over or under 300-point range? And we basically, let me just look at on an hourly chart. I want to know when you actually beat me on this. You beat me on this in the 3 o'clock candle.
Really? It came that close.
Yeah,
wow.
we were when we were at 1430. It was literally approaching the 300-point mark, and then you tacked on those 30 extra S&P points. Literally,
Patrick,
in the last
I had
hour.
I had to buy about. I have 15,000 contracts, but it was well worth it. Okay, let me tell people. To be fair, I actually wanted the other side of that bet, because I am always a vol seller, and Patrick went and ruined it on himself. And so it's always, when you bet against your gut, you always lose, Patrick. That's just another example. Anyways, let me tell people about this game. Skin in the Game is our weekly opportunity to us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows: Duke and Duke, a pint of beer, a burger bet, a pitcher, a case of beer, a bottle of wine, and the steak dinner. The winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions. Okay, Patrick. All right. I knew it would come to me. We're going to do the June T-bond contract, not the Ultra. We'll just do the regular one.
The 30-year?
Let me just think. Do I want to do the Ultra? No, we'll do the 30-year, the regular one, the U.S. one.
So we'll do the ZB.
The ZBs, yeah.
And
not the UBs, not the crack cocaine ones, the regular ones.
All right, so
you don't trade a lot of futures, but like the UBs are.
No, I've got the here. I've got the ZBs. You want me to do the UBs? No, this is the
we'll
ZB
do the Zs.
Junes.
We'll do the Zs. Okay.
All right.
Up or down. We're gonna keep it nice and simple. Up or down from this close.
for Friday of next week. I'll take up.
Yep. Okay, you're on. What do we want to bet here, buddy?
You know what? You're pretty high conviction. Screw this shit. Steak dinner. I'm going all the way. You got the kahunas?
I'll take it. You're
all
done.
right, I'm going to go wagyu on your ass if you lose this one. All right, done. All right, so we're at 152.
I always lose. You know what? I'm going to lose this for sure. Couple of reasons. A, I got the position on myself. B, I initiated it and wanted to do it, and then C, I've gone and done it big. So I'm going to lose this for sure, folks. But I'm still doing it. Fuck it. It's like a hate. It's like a hate bet at this point.
All right,
okay. Lena, hop on and we'll do no stupid questions.
All right, Lena. What's the
Lena
first
knows
question?
when I said a hate bet where that saying comes from.
Do I?
Oh, maybe you don't. Okay, go
maybe I
on.
don't.
Maybe
I don't
it's
know.
a hockey player guy thing.
Oh, yeah.
Okay.
If it's about hockey, I wouldn't know. Okay, so first question here. Thank you for a great show. So I wanted to short TLT this week, but I hesitated because I worry that big market players have no choice but to buy bonds. Even with rising inflation, how much can they actually sell? Where will they go?
There you go, Patrick.
It
was like this was made for. I'd forgotten we chose in this one.
I don't know what to. What do you want me to say about this? Look. You know what?
So I will say something simple. And the first thing I will say is players have no choice but to buy bonds. In a true scary environment, they don't buy bonds. They actually buy the front end of the curve. So we could have a situation where if it really got scary and oil started flying, the long end sells off and the front end rallies. That's where people truly hide.
That's a synthetic cash, right? Like you're going into,
and that's where they truly hide. But and going back to that question, the bigger argument is that if we, as rates back up and it becomes more and more easy for pension plans that used to be underfunded and now find themselves properly funded, eventually what they'll do is they'll start buying bonds and just reducing their risk. So that is one of the concerns that I have heard. I think we're miles away from that. I look at this and what was the rate on the 30-year, Patrick? What was the rate there?
Let me just.
It was
pull
like
back
2
up here.
3/4 or something. It was
242.
In real terms, this is ridiculous.
Yeah.
It used to be that you'd get on the 30-year it was the growth rate plus 200 basis points.
But you don't. Do you not subscribe to the view that there's a safe haven trade with global money now flowing into U.S.
I 100% subscribe to that view.
But that's can that mean that you're going to lose? But can you not lose your stake bet next week because of that?
No, but that's Patrick. That's already in the market. That has already happened.
Well, you don't think it can continue? You don't think that there's a prevailing trend?
Listen, listen. I'm going to lose my bet if for some reason.
No, you stop saying that because you're going to butcher for me. Just stop saying that you're going to lose because it's you're literally trying to trick the market gods. Just stop talking about the trade anymore. I want to have a chance. All right. So anyway, let's move on. Lena.
Second question here. Hey guys, this question might be a stress test to the No Stupid Questions title of this segment, but why do stocks like XOM and CVX go up and down with the price of oil? If oil prices go up, they can of course sell for a higher price, but don't they also pay more oil for themselves? Is it because they also own so much oil that when the price goes up, their underlying assets go up as well? Or is it because they somehow increase margins by selling for more than their relative increase in cost? Or something else completely? I've often wondered the same about banks and interest rates. If rates go up, then banks lend for a higher rate, but they also borrow for a higher rate. So where is the increase in profit coming from? Thanks as always.
All right, Kev, I'm going to just start off and I'll let you finish.
Okay.
But what I feel our listeners are mistakenly doing is believing that fundamentals matter. No, just kidding. But but the what actually I think is very important to highlight is the importance of sentiment and money flow. And so what happens is that when the market and market participants are trained that they believe oil's going higher and they don't want to access it through the futures market, the reflex is to put money to work in the energy space. It drives flows.
It's like that's the flows, but they're actually going to make more money. The reality is that they're selling oil, and the oil is going up in price, and their costs, yes, at the margin, they're using the oil they're using.
Well, that is certainly the bigger, but the most immediate correlation is the reason I've heard the stat many. I've never done the crunching of the quant numbers myself, but there's some sort of like 80+% correlation between commodity stocks to the underlying commodities. That exists, well, in part because of what you just said, which is that they profit from higher. But I think that generally people use those commodity stocks as their way of participating in their bullish or bearish views on the underlying commodity.
Well, there is an element of that. True. Okay, you're right there that people use that, but I think it's more if the fundamentals weren't moving, then people wouldn't be buying those commodity stocks. The reason they're buying the commodity stocks is because they're anticipating the fundamentals moving. But I will say this, Patrick, about this last question or last part of the question about if interest rates go up, doesn't the cost of borrowing go up for the banks? One of the things that people watch for is the shape of the yield curve. So if the interest rates go up and the curve is flattening, then yes, a lot of times you'll see a situation where the banks will be less profitable. And what they want is actually the rate, because they usually borrow short and lend long. So they'll borrow an overnight or 3 months, and then they'll lend out at 2 years or 5 years. So when that spread is wide, that's when people rush to the banks. So just be aware that it's not just as simple as the overall level of interest rates for banks. It's more to do about the shape of the curve.
Right. All right. Lena, the last question.
So last question here. Since the current geopolitical troubles have commenced, every morning I sit down at my desk and promptly fall out of my chair when I see the price of gold has not added another zero overnight. What's it going to take to break the paper gold market so that real price discovery can take hold of the market for physical gold?
Patrick, all the doom kind of zero hedge crew, they're all following you.
Oh my God. Okay. So let me start off, and then you can kind of tell me whether I'm off. To be honest, what I think that a big issue is that everyone has seen the volatility in crypto and the type of returns that are being made, and everyone wants gold to be this magic savior that makes hundreds, if not thousands, of % return as the financial system is failing, and gold is the savior. But to me, I think gold plays an incredibly important role, and it hasn't failed to do so. If you think about it, over the last 2 decades, gold has more or less gone from $200 an ounce to $2,000. It's got up tenfold over a thing. If anyone's held gold over the last 20 years as a store of value, gold didn't disappoint. It's just if everyone has the built-in expectation that somehow gold should be at 5,000 or 10,000, of course they're going to be disappointed that they didn't get that gold's not behaving like a cryptocurrency. But I don't think that I just think that's the wrong expectations.
That's a great point, Patrick, because isn't there some line about an ounce of gold will buy you a nice suit? And they've gone through history and whatever in 19.
And right now you could get a pretty good suit for $2,000 US.
Yeah, but it's going up, so the price of gold's going to have to go up. Okay, Patrick, I completely agree. That is a great way of framing it. The other point is that there is all this talk about paper versus physical, and there's the whole crew that don't believe that you own gold if you don't actually own it yourself. Although I understand the need for central banks to own it themselves because another nation will take it from you, I don't worry about that as much. I don't know how you feel, Patrick. I look at it, I think, could we get a squeeze in various contracts like we had with the nickel situation, or when something gets tight in gold? I fully expect it will. And listen, I'm a bull. I think the gold, I've said this for a while, and I'm feeling even more confident about it. I think the gold's going to have $1,000 up week one of these days. Ultimately, I think it's going to be because the People's Bank of China comes for it, but it's a different matter. I, though, do not worry about owning GLD or owning my gold future versus having it buried in my backyard. That's just me personally. And I also believe all the gold's there in Fort Knox and all the things. I don't think that there's some group keeping the price of gold down. I think if that was that you would see situations where really smart players take the other side of it.
What is interesting, because I know someone that tried to go to the physical market and buy coins, silver coins in the last couple weeks, and they were quoting $33 an ounce, like asking a ridiculous premium, and that person asked and said, "Well, how much would you take my existing silver off on thing?" And they're like, "No, just spot 26." Like they're fucking showing a spread of like $6-7 to get physical. Like it's no, I'm just.
No, but I think that's coins. Like
coins. But
going,
it's a liquid market. Of course, the dealers
are trying
to
go and buy like a brick of gold. There's no problems right now with the bricks of gold. Coins are different.
Oh, that's it. Now you know
minted.
what? I only heard this story from a friend. I'm gonna go check. Like I'm gonna go and see what I can buy a
brick
like
of gold?
10 ounces of gold. No, 10 ounces of gold. I'm gonna go and try buy just a small bar or something.
Listen,
like
I
that.
think it's going up. I'm just
curious about the liquidity of the bar. Like I just want to know how much of a premium I got to pay over, or where the current spot is on the market.
Let me just everyone is entitled to their own opinions, and obviously I can be wrong just as much as anyone else. But to me, this whole idea that they're keeping the price of gold down.
Oh, I'm not in that. I'm just
I know, but let's just think about this. We've seen time and time again when there's big short positions that large players sniff it out and they actually squeeze the shorts. To me, if there was a short position like they thought, then we would have a situation where China would come and say, "Okay, fine, I'll take all that. Please deliver it here." Or George Soros or whoever, whatever big hedge fund, Citadel. If there was an opportunity to make money by squeezing the shorts, I think they would do it.
Right.
And I think they have no qualms about doing it that side or the other side. Now, I think, is there something weird that happens on Sunday nights when they move around quotes and jerk around quotes? 100%. They use illiquid times to set different prices. But ultimately, I think those are markets that if someone big wanted to take the other side of the trade, you could have bought it.
Yeah.
And
I mean, if they could squeeze,
I think the market's actually more fair. And I just, to me, anytime I hear paper versus physical, I push back. But that's just me. And listen, you the physical folks might have the last laugh when I go to get my contract and it gets cash settled and they have it in their backyard. That could be, and that's just a risk I am personally willing to take.
There you go. Okay. Anyway, Lena, where can people submit their no stupid questions, only stupid answers?
So if you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
All right, Kev, take us to the close, buddy.
Okay, so thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're there on Twitter every day. Lena gets tired of talking to Patrick and I, although she doesn't even see Patrick anymore. He's always gallivanting across the globe. You can listen to the Market Huddle on all the networks. You know them. Give us a rate and a review on iTunes. Patrick, where can they find you?
You can follow me on Twitter at Patrick Ceresna, or you can find me at bigpicturetrading.com. Kev, where can they find you?
I'm at Kevin Muir on Twitter, or you can check out my newsletter at themacrotourist.com. Listen, we can never have too many friends. Bear market, bull market, we're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
It's funny that you said that Lena doesn't get to see me anymore because gallivanting around, and I had a beer with Lena just last week down here in Playa. Oh. So you are incorrect. Lena does see me.
I just can't get away.
I forgot about that. Speaking of beers, why don't you rate this new one?
Oh, it's sessionable, Kev. It's sessionable.
Crushable.
It's crushable.
Is it crushable?
I don't know. What is that? What is it?
You know what? It's It's a nice beer. But you know what? I can't keep rating every beer above the core line. You know what? I feel like this is a good beer. It's a beer that if they were bringing it on the table, I would keep drinking. But do I want to give this above average score? I'm gonna give it a 7.5, right down the middle of my core scores. I don't want to shit on it, but I don't want to give it any praise either. It's right down the middle. I would encourage anyone that's down here to grab one of these if you find it. It's a good beer, but you know what? There's a lot of different beers to try. You gotta test them all.
So Patrick, now that you're like in Mexico, what is your ratio of trading versus hanging out at the pool, beach, whatever?
You know what? No. I actually. What's nice is the time zone shift actually happened, and it was actually great because like now the market closes like at 3, and so I can usually wrap things up, and if things aren't really going crazy, then by like 2 o'clock in the afternoon I'm done trading, and I can sneak away, and there's a nice sun in the still nice and hot, and you can squeeze a couple hours of sunshine at the and so no, I'm spending a lot of time trading still.
I bet he's.
I made a long story.
That's the
I still
official lie, and we're going to stick to it. Is what you're basically telling me.
I don't get day drunk down here, if that's what you're asking.
Day drunk. I don't understand people that drink in the middle of trading days. I don't.
Well,
get
sometimes if your positions are going against you, it's the only coping
I guess
mechanism.
so. Like sometimes we've had like we taped this at weird times, and I'm like, I can't start drinking at noon on a Friday. I still got to trade the afternoon.
Yeah.
Anyways, I'm a bit of a wimp when it comes to that.
The problem is that you're just not in sales.
That's true.
Get into institutional sales, and that lunchtime
That's right.
drink
That's
is.
like, I would have either not had a job, or I would have learned how to drink at lunch. Speaking of which, by the way, Patrick, you're going to miss it. On Monday, Toronto is going maskless, buddy.
Woohoo!
Nice.
It's all
Nice.
over, except for the subway.
Well, you know what? With the new record spikes in Europe coming in, it won't be long before.
I know. I'll take
masks
the other
are-
side of that. They're not doing it again. They're not going back.
They shouldn't, because I think they learned their lesson from the truckers that you don't.
Don't go into that, Patrick.
No, I'm just saying is that I think that the people are tired of this, and they know that there's a huge political consequence to bringing it back, and so they're only going to bring it back if it's under 100% necessary. Is the point I'm trying to make, right?
Okay, so the point I'm trying to make is that we're going to get this piss up going.
Yes.
Yes,
I'm very interested.
I'm very.
I hope you guys both show up.
I'm very interested. I'm very interested in this upcoming piss up.
No, we got to get on that. Actually,
Yeah.
we got to pick something. I know you're there. I did send you the first thing, and you did not respond to me on my first.
No. It was. I know. I didn't respond because I thought it was a good choice. wasn't going to push back.
So, Lena, you have to get us along and keep this going so that we get it, and people have enough time to come. So it's not just Torontonians that come.
Yeah. The weather has finally warmed up in Toronto, so it's.
Yeah, it
about
is nice.
camp
Actually, I
time.
got up this morning, Lena, and I went outside and I heard birds.
Oh,
What?
Everybody else is like going to be like, "What are you talking about?"
Birds? What are those?
I don't know. You know what made me think? Did they just come for the spring, or are they been hiding?
I don't know.
I don't know either. Because we do have birds that never leave, like those little chickadees and stuff. They never leave.
Yeah, they
And the
don't. They don't
sparrow
ever
never
leave. I don't
leaves?
think so. I don't.
No.
Think so.
And then we have
Oh,
some.
come on. Sparrows are migrate. It's right from
I don't think so.
Monty Python's Holy Grail.
Really?
The-
I don't remember that part.
The migrating sparrows.
Is it really? Like, are you not shitting me? Have I forgotten this?
Yes, it's the most important part of the movie.
Oh,
It's
this,
right at
is
the
this
beginning
the one
of it.
movie that Patrick remembers but Kevin doesn't?
No, so
That's-
I don't remember
I've-
the whole thing. This is the one with Monsieur
I've
like
watched
a
that
wafer,
movie
right?
like 10 times as a kid.
Is it, Patrick, is this the one where would Monsieur like
Holy Grail.
a wafer? No,
No.
I'm thinking
Holy Grail.
I'm thinking meaning of life. Okay,
Yeah,
so
no.
I got a little bit of Jimmy Jude story to finish our night here off.
Okay.
And we didn't talk about it, but Jimmy Jude has a boss that says that owning too much theta is like dying from getting suffocated from really big fluffy pillows. Okay? Okay.
Okay.
So I told Jimmy, I said, when you said that, it always reminded me of the Monty Python Meaning of Life, Part 7, Death. And he was like, what? I've never seen that. So I sent him the clip, and that's always what reminds me of. Now let everyone else go figure that out on their own. But that's immediately when he said, like, dying of big fluffy pillows, that's what it reminded me of.
That's hilarious.
Well, yeah.
All right.
All right. Anyway, on that note,
everyone's going to be quickly figuring out what that is. Lena obviously doesn't. Lena's too young. And Patrick, I can't believe you don't remember. Do you remember the movie?
Yeah, but I'm trying. The death scene is when the Reaper
don't
comes
say
into
anything
the
more.
house.
No.
Yeah, but
no. We'll just let it be. But that's ultimately what I thought about with Jimmy Jude.
You know what? Like, okay, cool. All right,
We'll
let's leave
just
it
let you figure it out.
Now I got to go. I got to go
He
do my
chose the
homework.
manner of his own death. Let's just put it that way. That's all you got to know. This
All
guy
right.
chose the manner of his own death. Okay,
Oh,
Patrick,
have
you
a
go
great weekend, everyone.
evening.
Yeah.
Everyone, thank you for tuning in, and we'll see you next week.
Yeah. Cheers, everyone.
Okay, bye-bye.